This video is going to show what's new in version 4.282. The first thing that's new is we've improved our volume profile charts. This lets you look inside the bar and see where most trading activity happened. They now work on range charts, and we've also put in the point of control and the value area, which you will learn over time is incredibly useful and should dramatically help your trading. So to bring this up, click on chart, euro dollar. If you want to look at it on a daily chart, period D. I like to change the colors of the background so that I can see the volume areas better. First, I'll make the chart bigger so it fills in the whole screen here so we can see it better. So you right click on the chart, and I like to make the up and down candles very dark and get rid of the wick, and you'll see why in a second. After you do that, you go to Add Studies and go down to Volume Profile. And as far as we know, according to eSignal's website, they allow you to download 10 days of tick data. We do cache the data on your hard drive, so after you use this for a while, you can have more than 10 days of data since, data past 10 days is cached. But for now, we'll just put 10 days in here. And the slower your internet connection and or the slower the eSignal servers are, the longer this will take. But most of the time it comes up in 30 seconds for me. And hit the plus key to zoom in a little bit. And once it's done, it's going to show you where the activity happened inside the bar. Now, for daily charts, basically this shows you three things. The middle line is where the most activity happened during the day. It's called the point of control. You can see the point of control, this day right here is 1.2627. And then it shows you the value area, which is where 68% of the trading activity happened above and below the point of control. So and notice this next day right here when it came down to the value area, and there's major activity, major levels of trading activity happened here, and it acted as support. This is real support resistance. Previous days high and low, pivot points, Fibonacci's were all areas of support resistance. But this is real support resistance because these are real areas that traders have real positions at. Notice the point of control this day. The next day the price opened there. There was such trading activity here it couldn't get through that price, and it couldn't close above that price the day before. Tells you a lot of information. The market spent a lot of time here but closed underneath it. So there's some traders that might be long here. When it comes up to that price the next day, we're down a little bit of money. They exit their trades near break even, and that selling pressure causes it not to go above there. It's also wonderful because this day right here when the market fell, went back up, tried to break through the highs, wasn't able to. The value area is right in the middle of the bar. If you see that next day it open and not get over the value area high, not able to get over the point of control, and then break the value area low right here at 2680, you can look for sells underneath 2680 versus waiting for the previous day's low to get broken all the way down here. That's 45 pips earlier entry into your sell. And notice stay here. Value area is kind of in the middle. It opens, not able to go above the high here, comes down underneath the point of control. Since the trend is clearly down, you can start looking for aggressive sells underneath 25.55 versus waiting for the low to get broken all the way down here, 32 pips below it. Let's look at some other currencies on this. And by the way, this also works intraday too. I like the 240-minute and hourly charts. Let's scroll back and kind of look at this from Sunday. Price opens, the value area, it closed above there, but it did not go above the value area of the previous bar. So you're clearly in a downtrend. And the next area opened, it wasn't able to get above here, closed underneath, or went underneath this area, went underneath this area. Clearly allows you to get into a nice downtrend. And you'll frequently see bars. This is a 4-hour bar, but all the activity happened at the high of the bar. Notice this next bar came down to the bottom area, the value area, wasn't able to get underneath it. Very big clue that the future price direction is going to be up. And that's what this really is designed for. I'm mostly using it in daily charts because it allows me to get into breakouts up and down outside the value area versus waiting for the previous day's high or low to get broken first, which can be 30, 50, 60 pips away. The value area can be broken. You can get into a new trend much quicker and with much more confidence than you could before, and you also have a much bigger upside potential. If the trend continues, you're going to make more money, and that's the whole benefit of this. That's the whole reason I put this in there. Now, not only does this work on obviously any intraday time frame, but we've got it to work on range bar charts too. The euro dollar moves about 120 pips a day from high to low, so you might set something 10% of the average daily range, so that'd be about 12 pips, 12-hour chart. So guess what? Your value areas work on 12 pips per bar charts, or 10 pips per bar charts, or 5 pips per bar charts. Today was a relatively dead day. However, when you have a dead day like this where it's not moving around, it's very choppy, when price goes and opens up and spends a lot of time in one area like this and then goes underneath the value area, and as you can see, it updates as you are watching the bar live as well. You can see that we're above the value area, but we're underneath the previous bar's value area. It's not able to get above there, and there's a lot of activity right here. It's going to have a tough time getting through 24.96. So you know that. You can see inside the bar, whereas before you never could. You never know where it's going to kind of stall and where it's going to, when it breaks through a certain price level, where the next area it's going to go to. And the farther back the bars are, the less valuable they are. But, in trading live, this is very significant. It's the previous bar. There's still traders that, may be long up here. The price fell. When it comes back up to that area, those many traders are going to try to get out of the trades near break even, and there's going to be some natural selling here until it gets above, really 24.98. There's not really any resistance above. There's not much activity here. The previous part of the day was down. There was some trades earlier around midnight at that area, but people who have trades earlier probably got, a lot of them have already exited, so because it's farther back, it's less significant now. I'm going to show another example of this. This is a New Zealand dollar. I showed this in the class last Thursday, I think. This was obviously in a very strong uptrend. This is a very balanced bar where most of the activity happens at the middle. These are wonderful bars to look for because breakouts of very balanced bars where there's most activity in the middle, some at the top, some at the bottom. It's almost like a perfect half circle. These tend to precede breakouts. And the next day it broke out. As soon as it went above this area right here, 79.25, you can start aggressively looking for buys versus waiting for the high up here at 43. It's only about 20 pips earlier, but that's 20 extra pips for you. And notice after so many days up, 1, 2, 3, 4, this day here it opened, it closed down, but most of the activity is at the high end of that bar. There's no activity at the bottom. It came down that day and immediately flew back up, right? So that's a very big reversal pattern, but it's also already been up 4 days. So the next day when it broke out and went up, you could have bought it and wrote it up. Once it comes back down in the value area, because it's been up 4 days in a row and it had a false breakout, it was very likely to fall. We didn't know it was going to fall this much. However, instead of waiting for the low to get broken down here at 79.11, guess what? The value area low is up here at 47. Good 36 pips before the low. And so that day, when you started looking for sells, it fell very quickly to the lows and below the lows. So you had an extra 36 pips of potential profit. You never know, you're going to catch a nice 100 pip drop once it breaks the value area, but 36 pips is a little bit more than 1/3 of those 100 pips. You got, if you sold the low, you would have got 60 pips, and you got a full, or 65 pips, whatever. You got a full 100 pips, right? That's 50% more profit in this case by using the value area, and that's significant. The whole key to trading, the only real secret to trading, is small losses, big wins. Don't worry about your winning percentage too much. As long as you're getting 2 times and 3 times bigger wins and losses, you'll do fine. Winning percentage is bullshit. It's for the new traders. I can spot a new trader a mile away because the first question they ask me is, what's your winning percentage in your system? I mean, no offense to people that think that way, but it's pure stupidity. Some of the most profitable traders that I see, because we offer our software free. If you trade with FXCD, FXCM, Forex.com, and Alpari, we can see people's trading results, and I can look at their trades, and I can see the key is big wins, small losses. And it's also the case for myself. There are days where I'm 70, 80%, even 100% winning, but I always focus on trying to take trades that are going to give me 20, 30 pip win while risking 8 to 10. And that's the key. You're not always going to get 20, 30 pip wins, especially on choppy, low activity days like this, like today. But regardless, that's the key. Now, after a low volatility day like today where it doesn't move that much and it's inside the previous day's range and you have the value area in the middle of the range, tomorrow should be a good day as long as it doesn't break out again later today, which it could. If it looks like this at the end of today and tomorrow opens and it breaks out above the value area high, you can aggressively look for buys. Or if it goes below the low, you can aggressively look for sells. And you'll be in these trades, even though on low volatility days like this, maybe 15 pips early than you would have. So this is one new feature in version 4.282. The other new feature, it's actually not a new feature, it's an enhanced, improved feature, is our FX trade signals. There's now probably at least 30 or 40 changes I put into this. Code that prevents some false signals, code that looks for high probability trades like pullbacks to the hourly moving average that was previously missed in the other version. So let me bring a range bar chart up and we'll show you, the improved accuracy of this. Now again, keep in mind, these are developed for myself and for people who think like myself. And the key is, again, to have small losses and big wins. And the market a lot of times is very choppy. So, it's almost insane to expect any system or tool to consistently have high winning percentages. Some days are easy. You can easily get 80 to 100% winning trades when markets just go one way all day. There's extreme strength or extreme weakness. Support resistance areas don't hold and just bust through. But the market's oftentimes choppy, waiting to see which way it's ultimately going to move. So you got to get in. You might have a loss. You might get in again. You have another loss. You get in again, and you got a big win. Guess what? The big win gets rid of the tiny losses. Notice how tight these stops are. This trade here, these two sell signals right here, when the trailing stop got hit, you might be short here at 52, out down here at 11, right? 45 pips. If your average loss is 10 pips, this one nice win gets rid of 4.5 losses, right? So earlier, you can see the daily, weekly, monthly trends down. So the preferred direction that any intelligent person on this day would have been focusing on is selling. You would have kind of been a lot more careful on the buys or skipped them altogether. But when it's above the hourly right here, it's more likely to go up. You can see it's kind of went up to the hourly, found resistance. This sell signal here never broke the trailing stop. So, usually when you get a sell signal, especially if it's going sideways, you might want to wait for it to break below the bar's low here to get short. You can see slightly more momentum to the upside than there were downside, that our tools statistically compare every currency to every other one. And then it breaks out here. Notice this buy signal here. This is one of our new patterns. It looks for kind of rectangle patterns like this and breakouts above the bar's high. It now looks and gets you into breakouts. In this trade right here, you would have been long about 57 and out here at 70. So you made 13 pips on that. That again can more than get rid of one tiny loss. And as the market went up here, there's quite a bit of strength here. However, the daily, weekly, monthly trend's still down. It's real hard to trade when the real-time momentum is up and the longer time frame trend is down. It pulls back right here. This isn't really not much of a pullback, but it didn't have that much weakness. it never really busted through the trailing stop here. But if you did go long, put your stop underneath the bar's low, and on that bar, it had this much strength. That's pretty scary. You want it when you buy to start getting and going up like this. It goes up real fast, and it has a lot of momentum. And if it doesn't happen, what I typically do is I move my stop in half. And so it came, the next bar open, came back down, closed. I will lose 6, 7 pips max. 7 pips, no big deal. Pulls back here. Notice how much weakness there is. It goes up a lot of, with almost there's no strength at all. There's a little bit of weakness. You go short right here at 57. It's coming back down. It's underneath the hourly here. Typically when that happens, you should have, an explosion to the downside. The market's very choppy around the hourly. So if you're shorting around the hourly, it comes down a little bit, starts to come back up, get out, make 4 pips. So you lost 7 or 8 pips, you made 4, you're down 3, comes back up again. There's less strength now than before. I'm not necessarily going to sell this one here, and I'm not going to really buy it here. It's kind of choppy. Whenever it gets in a choppy phase, you don't know if it's choppy earlier on, but once it does this, it is pretty choppy. So you got your trend lines here, you got 3 lows that have all hit. It's eventually going to do something. Notice this is a descending wedge pattern where the volatility is high, smaller, smaller. A breakout right here is one I'm definitely going to take. I probably wouldn't have got in here. I would have got in right here because, we had a small win, small loss. We're down 4 or 5 pips. Wait for the breakout. Boom, you got your big win here. And once it makes a big move like that, usually the next pullback, this trade here is pretty high probability, and it's down. This trade here is underneath the lower band. It's a little bit lower odds. I want to wait for a deeper pullback, 38 to 50%, Fibonacci. So you draw your fibs on here. This one wasn't at the 38%. This one was. So I'm going to go short right here when it breaks through the low, 27. And it didn't really make that much. I'm out right here at the trailing stop, 16. Made 10 pips. Notice the weakness on the way down compared to the strength on the way up. This sell signal right here, there's not much strength here. I'm going to give it one more shot to go low, and I want it to at least come down to the lows here. You go short right here, 16, trailing stop got you out, 99. You made 17 pips. And usually, at that point, I'd be done for the day. And that's how you use this tool. It does not use our build your own trend because this only works live. These signals work on past bars and real charts. And I'm consistently trying to color code these. The lower probability trades are darker green and darker red, as you can see. And the counter trend trades are circles. The trend trades are triangles. And mainly I have different colors on here so I can spot certain types of trades and put in code that gets rid of ones that I would not take, would not really want to even show up. And that's what I'm doing. I'm spending probably an hour and a half every day going through. There's 10 or 11 trend buy and sell trades, and I think 12 counter trend signals that show up in here. And if you click on them, you can see this one's a counter trend sell 3. This is a trend buy 9A. This one is a trend sell 5. Doesn't really matter, and I'm not going to reveal what each pattern does. However, if you see the certain trades you have better luck with than others, you might decide to take certain trades and not others. And eventually I might color code them all different. But right now I put that code in there so I know what the pattern is. If I see a bunch of them that are failing under certain types of market conditions, I'm going to put more stringent code in there that in the next release and the release after and the release after will get rid of some of the unnecessary losing trades and improve the accuracy. But again, the accuracy is designed to be used in conjunction with the daily, weekly, monthly trend, with the real-time momentum, and with regard to what's going on. Chart patterns are key too.